here. So it's always a pleasure that that in the Pritzker administration, there's no room between the wall and the wallpaper, and there aren't any silos. And then the message of equity and inclusion is built into, hi, Ted, everything that the administration is doing. So thank you. So again, my name's Chris Meister. I am Executive Director of the Illinois Finance Authority, and we were named the Illinois Climate Bank in September of 2021 when Governor Pritzker signed the Climate and Equitable Jobs Act, which was 900 pages and approximately 100 new programs. So I am not going to cover all of those items with you today, only the stuff that I think this audience is interested in. So the number one goal, and we've got a colleague here from our state's Public Service Commission, the Illinois Commerce Commission, is to establish 100% clean energy for Illinois by 2050 as state policy. At the Finance Authority as the Climate Bank, we have a mission to accelerate the investment of private capital into clean energy projects in a manner that reflects the geographic, racial, ethnic, gender, and income diversity of the state, very similar to our last panel. We also have a couple of long-standing statutory purposes: reduce the cost of debt to Illinois residents and taxpayers, and also to promote a vigorous Illinois economy. Ken, how do I flip this? How do I get to the next slide? Got it. Okay, thank you. I had a board meeting earlier today, so I did not have all of the time to focus. So, 900 pages, 100 new programs, and a goal to have the state have 100% clean energy by 2050. So how do you boil that down? I'll tell you how. It's these 5 pillars. Throughout CEJA, there are these 5 pillars: partnerships, quantifiable progress on climate, build it here in the USA, hopefully in Illinois, Justice 40, benefits and involvement. That's the federal executive order, very consistent with our last presenters. Poor people, disadvantaged people, and communities and businesses. And of course, the involvement and participation of organized labor. For those of us from the state of Illinois, those should be no surprise. So also from those of us that have been doing work in the state of Illinois, it was a surprise that Governor Pritzker's nation-leading legislation was then these 5 principles were adopted by the U.S. Congress in the federal bipartisan infrastructure law and the Federal Inflation Reduction Act, the bill and the IRA. And again, I think that's worked to our state's advantage because these 5 policy pillars came very naturally to the array of state statute-created entities that are pursuing and winning federal funds. This is a very important slide. Shortly after the enactment of the Inflation Reduction Act a couple of years ago, there was the first and to date only summit of green banks. And of course, green banks or climate banks as we are, they cover a range of development from New York State and New York NYSERDA, where the New York State ratepayers allocated $1 billion and created the New York State Green Bank, to the state of Connecticut, where they took sort of their equivalent of their state energy office and turned it into the nation-leading Connecticut Green Bank. Illinois, the state of Missouri, the state of Rhode Island, the state of Ohio have done something different. They're bond-issuing organizations. We issue what's known as private activity bonds under the federal tax code. our colleagues in Missouri issue basically their equivalent of the State Water Revolving Fund. More about that in a bit. And the state of Ohio does a version of clean air bonds, and Rhode Island does basically infrastructure, sort of a hybrid. So a senior member of Secretary Granholm's team addressed this rather large group in a deep sub-basement of a Washington, D.C. Hotel. And she put this up there. And again, for those of us who have spent our lives here in this country, this is a redlining map. The American middle class was largely created by federal home loan guarantees, single-family guarantees. And that created a lot of wealth and a lot of economic prosperity. In fact, so much that in January of 2018, Larry Fink said, when addressing his companies that he invests in, that the American federally guaranteed single-family mortgage is the basic building block of global capitalism. Now, that is made possible by the federal guarantee. And the Larry Fink letter, which has become somewhat famous, was because, look, some very large percent, 50, 70% of American single-family residential home mortgages are located within 50 miles of an ocean, and they're not worth very much if they are under the ocean. So that was a way of telling the companies that he was that he had invested in was the time that we'd better start paying attention to climate change. But the redlining maps are something that has distorted every urban space in this country. And in short, again, teeing off the previous speaker, there were families like mine who, over multiple generations, had the opportunity to gain wealth. Somebody got off a boat, somebody got off a train, somebody got off a farm. They went to work in a factory. Generally, it was a union factory. Somebody bought a home, and somebody went to college. And over generations, those home values appreciated in time, and wealth was passed down. In the summer of this year, the Chicago Community Trust issued a report about wealth in the city of Chicago. And in 2023, anybody care to raise your hand and take a guess what the average African-American family wealth is in the city of Chicago in 2023? Take a wild guess. Somebody, raise your hand. 0. So it was reported in the Tribune, but again, the comments that you've heard on other speakers from state agencies and the policies in CEJA and the other federal pieces of legislation, they're aimed at addressing that. Because again, that was a disparity created by conscious federal policy. And what's important about this slide is that a senior member of the U.S. Department of Energy, where a lot of these funds are going to flow through, was explicit in the new money, we are not going to recreate that, and when we have the opportunity, we're going to fix the sins of the past. So this has been our success over the last 14 months or so. 14 months ago, the Illinois Finance Authority had 0 federal funds under award or documentation or in our accounts. Today, we have just under $400 million. The red rectangles are those funds that can come to our balance sheet. We're self-supporting. We are not appropriated. Those are going to basically capitalize the climate bank. The green rectangles are federal grants that are going to go out the door in sub-grants and hopefully build the ecosystem and advance the governor's goals of 100% clean energy by 2050 in support of the Climate and Equitable Jobs Act objectives. Highlighted in yellow are a couple of very, very interesting federal resources that I'm going to talk about that's even beyond the grants. So you heard me mention the state revolving fund. I think that it is the most successful and effective form of climate finance that exists on the world today. Again, I'm biased, but again, between 2013 and 2020, in close partnership with our IEPA, we accessed the capital markets for nearly $2.6 billion that went into low-interest loans for public sewer and water projects, put people to work, reduced the rate and property tax burden, and delivered cleaner, better water and advanced public health objectives. So this is just a snapshot of what the Finance Authority is, the Climate Bank, what our successes were as of the end of the fiscal year, June 30th, 2024. Over on the left-hand side, you can see what federally tax-exempt conduit private activity bonds look like. We were designated a state energy financial institution. We helped out other state agencies and Illinois applicants in applying for some of that federal money. And most importantly, in calendar years 2022 and 2023, we mobilized over $600 million in private capital for climate finance projects, and over 50% of these investments were made or benefited disadvantaged communities or individuals, either under the federal standards or the state standards. So this is a developing product. Many of you may have heard it, commercial property assessed clean energy financing. It's a non-public subsidy form. You get to a lower interest rate by a lien on a portion of the post-improvement stabilized property. And that lien is at the same level as a property tax lien. So it means that it's very secure. Now, again, there are over 1,200 local governments, counties, cities in this state. We've had about 20 of them that have adopted our standard ordinance. There's more on our website, but we think that ultimately this is going to be an important part of decarbonizing the built environment, and it may well work productively with some of the other federal resources that I'm about to share. The Small Business Credit Initiative, this state through DCO was an early leader about 15 years ago. During the Great Recession, there was a second larger tranche of money that was made available at the end of COVID, and the IFA, as the Climate Bank, received a sub-grant. So what this has enabled us to do, these are basically participation loans, and it allowed us to engage private commercial lenders and see what the market was and start to understand what sorts of structures would work once the red rectangle, the money from the red rectangles ended up in our accounts and being deployed by our staffs. So it's been very, very useful. Just to give you a quick example of what it typically looks like is that Irma Lopez here, raise your hand, Irma. So Irma Co. has got a widget making factory and is approached by a solar developer. And she says, Irma, this is your lucky day. We can put a $200 solar project on your roof. It will reduce your utility costs, and there are all these federal and state credits. And Irma says, that's great. And then, and so the developer says, here are the state credits from the Illinois Power Agency. They're known as Renewable Energy Credits, or RECs. That's $50. You'll also get another $50 from the Inflation Reduction Act credits. And so you only need to borrow $100. And Irma then goes to, say, pick a bank, Wintrust, and says, I need $100 to put up this solar array with a battery backup. And they say, that's great, Irma, it's 8%. And Irma then says, can you do better? And Wintrust says, I think that there's somebody over, her name happens to be Maria Colangelo, over at the Illinois Finance Authority. They can do a participation. Since Irma has got a factory in a disadvantaged neighborhood, she's a woman and she's Hispanic. She falls under the U.S. Treasury category of SETI, socially and economically disadvantaged individual. That means that the IFA can participate in Wintrust's loan to IrmaCo for 1%. 1% and 8% means that it's basically a synthetic interest rate of 4.5%. So then that makes the entire project much more attractive to IrmaCo. That's how that works, and it's been very successful. This is the real opportunity, ladies and gentlemen, of the Inflation Reduction Act are an array of credits. And they're very interesting and exciting and streamlined credits. State and local governments and tax-exempt entities can now get direct federal refunds, also known as subsidies, even though they do not have tax liability. So these are very different from the tax credits that this audience may have heard of or dealt with in the past. New markets tax credits, low-income housing development tax credits, federal historic tax credits. The Finance Authority worked with the General Assembly, and Governor Pritzker signed 2 pieces of legislation to make it easier for local governments to borrow from the Finance Authority when we got these federal funds. They're both law with current effective dates. This is an overall high-level summary of some of the many, many IRA credits, and they basically break down to production tax credits and investment credits. This is a very good example of the power and the strength of these subsidies. This is a very simple example of a $1 million solar project. And let's just say it's being developed by a state or local government or a nonprofit. So the base credit is 6%. So that is a direct subsidy. But since it is generally Illinois policy and most states, the state and most local governments abide by that, if you are working with state prevailing wage or project labor agreement or various organized labor agreements, that 6% multiplies by 5 times and becomes 30%. Then there are additional bump-up subsidies for materials that are made in America or if the project's located or benefited in low-income areas. This is our attempt to sort of pull all of these things together. I will tell you that next year, and again, we spend a lot of time at the authority focused on tax-exempt financing. Next year, no matter who runs the country after November, that Congress will be intensely focused on tax policy. And I can't predict what will happen in 2017. What we do as a line of business, private activity bonds that are tax exempt, were on the table in the fall of 2017. But I do know that one of the things that is likely to survive are opportunity zones. But this is our attempt. The green are the various state-associated financing and grants, and then the blue are the various federal, even though the SSBCI sort of arises out of federal funds originally. These are my colleagues. We've got Managing Director of Public Finance, Brad Fletcher, Senior Vice President, Maria Colangelo, Claire Brindley, our Program Manager, and I will take any questions. Come on, don't all speak at once. Ken, are we done?
Yeah.
Great. Thanks, everybody.